Time now for our market monitor, who has names he says will provide some downside protection in your portfolio. The last time he was on in May, he recommended Becton Dickinson, which is up 21%, Emerson Electric, which is up 10%, and Oracle, also 10% higher. Alan Bond joins us, co-portfolio manager of the top-performing Jensen Quality Growth Fund, which is up 20% so far this year. Welcome, Alan. Nice to have you here. And congratulations on the results. You are looking for diversification and global growth with your picks. That's one of the themes anyway. Let's start with your first one, Nike. Tell me about it and why you like it.
Yes, we think Nike's an interesting story right now. Obviously one of the most well-known brands in the world. And we think it's an interesting example of the disconnect that we see sometimes between short-term market sentiment and long-term business fundamentals. Right now, Nike is dealing with some challenges, including increased competition and some changing consumer behavior. But long-term, we still see their brand as resonating powerfully with consumers around the world. We think that's a powerful competitive advantage that will reassert itself at some point. And we think recent weakness in the shares is a great opportunity for long-term investors.
Well, they're right out of your backyard, aren't they, Alan, I guess. Let's talk about MasterCard, which is your second pick. If you're going to buy some Nike gear, maybe you pull out your MasterCard.
Right. And, so MasterCard, one of the world's largest electronic payment processors, and really, in our view, scale is an important part of the business. We estimate they will process more than 70 billion transactions this year, and we think that positions them very well for the global trend in which electronic transactions are increasingly displacing cash transactions. We think that poises MasterCard very well for continued growth in both net income and, importantly, free cash flow.
And we'll finish up with Cognizant Technology Solutions. You say they have a very nimble business model, which gives it a big competitive advantage.
Yeah, so Cognizant is one of the world's largest technology consulting firms, and we think they're very well positioned for the trend in which businesses around the world are using technology to make themselves more efficient. Cognizant right now is in a bit of a maturation phase itself. It's taken steps to broaden its geographic revenue base. They just started paying a dividend this year, and they're in the middle of executing on a plan to improve profitability. We think these factors will allow them to continue to grow their top line and bottom line well into the future.
Very quick thought. How do you think the market finishes the year? Strong?
Market's been strong this year, and it really feels like it's following earnings. We've seen a good pickup in earnings growth. We expect that into next year as well, so that bodes well for the market.
On that note, have a great weekend, Alan. Nice to see you. Alan Bond with the Jensen Quality Growth Fund.